Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, today's volatility picture, all in the red. All vols are down no matter what asset class you want to talk about, whether it be equities, whether it be agriculture, energy, metals. Everything is down right now, softer. Nothing's down a lot, but I think what's really important to talk about, what's behind all this volatility right now. We know it's the fiscal cliff. We know about Europe. We know about France losing its credit rating. But what asset classes out there are driving volatility right now? Well, what's putting a ceiling on volatility? If we look week over week, oil vol, number one influencer of keeping a ceiling on volatility. As we know, oil vol has dripped lower every day for the past 7 trading days. Right behind that is FX vol. We know that FX vol hasn't been this cheap in the G7 currencies since about 2007, continues to go lower. That's been keeping the ceiling on most assets. And in third place would be rate vol. I mean, it's a little bit complicated because fixed income vol has been mixed when we look at credit and we look at sovereign debt. However, when we look at the whole complex, rate vol has been lower, as judged by the 10 years and the Eurodollars, keeping a ceiling on asset volatility. Now, on the other end, what's been holding VIX up? What's been holding the floor to volatility? Well, it's really been two things. One's been sovereign debt. Sovereign debt has been a 2% contributor to keeping volatility as high as it might be right now. High is a relative term, because right now we have, for instance, S&P implied vol about the 18th percentile, so it is pretty cheap. Secondly, what's been holding up volatility is gold and silver. Gold and silver has been a little bit over the map the last couple of weeks, but has drifted lower just about every day for the past 5 trading days. That's basically kept the floor to volatility. Lastly, what are the biggest movers in volatility week over week? Today is Tuesday. We look at the last 6 trading days. What 2 sectors have had the biggest influence or the change? And the first one would be FX vol. FX vol has just gone down everywhere. That just happened actually combining commodity vol with Australian dollar and Canadian dollar. Just finally giving way. But up until last week, FX vol was probably in second place, but now leading the pack. Lastly, sovereign debt vol, as I mentioned earlier, that is now a 5% contributor to overall asset volatility. So it's really tricky when we see VIX. We try to explain why it's trading where it is. It's being influenced by a lot of different factors right now. And again, as I said, the biggest factor driving all assets seems to be oil volatility. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.